Hi everyone, so my name is Nur Amira Binti Zakaria and my metric number is 295535. So in this slide, I will be introducing you to the fundamental of portfolio management. So portfolio management is all about managing individual investment with the goal of maximizing return over time. So the key objective here to make smart and strategic decision using a well-balanced mix of investments. So this includes choosing a variety of assets that suits your goal, risk appetite and also a market condition. So let's take a look at the objective of portfolio management. So this include capital growth, maximizing returns, ensuring diversification, and having a tailored investment strategy that align with specific financial goals. So why is portfolio management important? So it helps with a risk control through a smart resources challenge. With risk control through a smart resources allocation, allow flexibility to adapt to market changes and offer a protection against uncertainty in the market. So next is the component of portfolio. So let's break down the main component of the portfolio. So first is the assembling a stock portfolio involve a selected stock from a different industry. So the purpose is to strike a balance between growth, income and stability. We use a method like a market analysis, reviewing company performance and also the assessing the economic outlook to guide our choices. So next is the portfolio rebalancing, which means that adjusting the asset mix to stay aligned with your goals. It is important to control risk, encourage discipline and helps ensure a long-term consistent in performance. And finally, we look at the portfolio performance, so which is how well the portfolio meets our financial goals. We use a metric like the total return, annualized return, volatility and the Sharpe ratio. So this evaluation tells us whether our strategy is working or needs to be adjusted. Hi guys, so in this slide, we will explain what we do in these assignments. So we were working with a capital of 500,000. So our main goals is to diversify across at least 7 different stocks to reduce overall risk and increase the stability. So for this purpose, we select the following portfolio assets. So first is the Eneri American Berhad, NBB Holding Berhad, Greentech Technology Berhad, Vincent Holding Berhad, Apex Healthcare Berhad, MSC Berhad, and Golden and Apple include. So purchasing a mix of a company from a different sector include technology, finance, healthcare, energy and even international assets like Apple and Gold, we aim to build a resilient and balanced portfolio that can withstand market fluctuation. So hi guys, so in these slides I will continue with the current global economic landscape. After the COVID-19 pandemic, the world economy is in a current recovery mode, but this recovery is not equal. So developed nations like the US and EU are growing slowly, but at around 2 or 3%, while countries like India and Chinese recovering at much faster pace. However, major challenges still remain. Inflation, supply chains, include a rising geopolitical tension are disrupting process. So on top of that, income inequality continues to grow, especially in poorer countries. Labor shortage and inflation also pressure policymakers to maintain balance between recovery efforts and also the price stability. Okay, so in this slide, we take a closer look at the Malaysian economic situation. So our GDP took a major hit in 2020 due to the pandemic, but there was a recovery in 2021. Still growth has been unstable and modest. As of Q1 2020, GDP growth stand at 4.4%, which show improvement but challenges remain. So this include inflation, low foreign investment, and weak consumer demand. So on the income side, so Malaysia faces rising inequalities, wages and high young unemployment. So many workers are stuck in a low skill or informal job that don't keep up with inflation. So the top 10% of earners have hold over 35% of the nation income. So highlighting the urgency for a better wage policy and inclusive. Finally, we will talk about the trade and the inflation. So Malaysia depends heavily on export like electronic, palm oil and petroleum. So these are sensitive to global demand and geopolitical events. Any global slowdown can hurt our export income. At the same time, we import a lot of food and raw materials, making us vulnerable to inflation and currency fluctuations. So this contributes to a trade deficit and weakness of our economic stability from 2020 to 2025. So Malaysia have struggled with high inflation derived by supply chain problem and rising the commodity price. So they reduce our purchasing power. In response, the government and Bank Negara Malaysia has been working to stabilize prices and support sustainable growth.
So I will give a quick overview of six major industries from our stock portfolio. First, the semiconductor industry is one of the Malaysia key sector This is because it contributed RM 575 billion in export in 2024, which is around 25% of the national GDP. The government has introduced the National Semiconductor Strategy with RM 22.86 billion in funding to expand chip fabrication, packaging, and integrated circuit design. The global demand for AI, Internet of Things, and electric vehicle is pushing this growth. Also, Malaysia aims to double its global market share from 7% to 14% by 2029. However, we face some challenges like land shortages and rising costs, but the solution come out with the collaboration of government and private sector. Next is the financial industry, which contributed RM 82.37 billion to GDP in 2023. With the support of the financial sector, blueprint 2022 to 2026, the industry is advancing fast in digitalization. AI, robotic process automation, and even digital bank are becoming common now. Mbank, for example, it uses AI to automate credit and loan approval. Bank Negara is also exploring central bank digital currency through international collaboration under Project Tambak. The third, transportation and logistics industry. In 2024, it was worth RM 131.5 billion and is expected to expand to RM 174.2 billion by 2030. Malaysia is improving its global ranking in the World Bank Logistics Index, which is ranked to 26, already up 15 spots. This is because major infrastructure projects like the East Coast Rail Link and Port Klang expansion are underway, and also the ASEAN Express trend is enhancing the regional freight delivery. For now, the country is shifting to smarter logistics with electric vehicle and AI-powered container ports, such as the one in Negeri Sembilan. In addition, Sampanga Bay in Sabah is also being upgraded with AI by DP World, and all these work are backed by the strong government policy like the National Transport Policy and the Logistic Master Plan. We have also analyzed the energy industry. So Malaysia is the second largest petroleum producer in Southeast Asia and the fifth largest liquefied natural gas exporter globally. But for the latest trend, the government are also work towards the green energy. The National Energy Transition Roadmap targets 70% renewable energy by 2050. The one example is the Instant Green Tech Charge EV, which aims to build 10,000 EV charging stations supported and the investment received by the Khazanah. With large oil and gas reserves, Malaysia is balancing energy security and sustainability. The next is pharmaceuticals sector. Malaysia pharmaceutical sector is growing due to an aging population and rising healthcare needs. In 2020, 6.8% of the population was aged 65 and above, and also healthcare spending increased from 3.4% to 5.1% of the GDP between 2011 and 2021. However, for the Malaysia is still rely heavily on imported medicine to reduce to address this. The government introduced the National Industrial Master Plan 2030, targeting RM 2.5 billion GDP contribution from this sector by 2030. The support also comes from the pharmaceutical productivity measures to boost the innovation and R&D. Finally, the Malaysia consumer electronic market is expected to grow from RM 14 billion in 2023 to nearly 17 billion by 2025. This growth is powered by the demand for smart devices, 5G, wearables, and AR or VR technology. The global brands like Apple, Samsung, Huawei dominate, but the Malaysia is supporting local innovation through R&D and Internet of Things integration. This help our nation to stay competitive and meet changing consumer preference.
I will present the fundamental analysis of our selected stock. So the first one is the ROE, which measures how efficiently a company uses shareholders' fund to generate the profit. Among all, Apple Inc. leads with a remarkable ROE of 196.96% in 2022, showing its strong profitability. The Apex Healthcare also recorded an impressive 43.3% in 2023, driven by a one-off disposal gain. Meanwhile, Inari and Gridtech show declining trends from earlier highs, reflecting the margin pressure in the semiconductor sector. Last, the AAMB and Insun improved steadily, rebounding from their earlier losses. Next, we look at the net profit margin, which tells us how much profit a company makes from its revenue. The higher the percentage, the better its cost efficiency. Apple consistently performed well, maintaining a margin above 23%, showing strong profitability. Inari, Instant, and Greentech also show stable or improving margins, especially Instant, which rose to 20.84% in 2024. AAMB had a big loss in 2021 with negative 45.48%, but recovered impressively to over 41% by 2024. Apex Healthcare peaked in 2023 at 42.51%, but dropped in 2024, likely due to the end of one-time game. Lastly, the MISC showed a steady recovery after the small loss in 2020. Now let's take a look at earnings per share, which indicates how much profit a company can earn for each outstanding share of its stock. Apple clearly stands out with the highest and most consistent EPS, rising from $3.31 in 2020 to over $6 in the last 3 years, showing an excellent profitability. Instant also performed well, with EPS steadily increasing to 0.53 ringgit in 2024, while AAMB recovered from a sharp loss in 2021, about negative 1.27 ringgit to 0.56 ringgit by 2024. Inari, Greentech, Apex, and MISC show relatively smaller EPS, mostly below 0.5 ringgit, but remain positive and stable.
Hi, my name is Nurina Pisa, my metric number 295178. I will continue for fundamental analysis. First, let's look at the price to earning PE ratio. This ratio shows how much investors are willing to pay for each ringgit of a company earning. For example, Apple and Inari have a high PE ratio, showing strong investor confidence and growth expectation. On the other hand, AMMB and Apex had a low or negative PE in some years, which could indicate undervaluation or past financial issue. Overall, the PE ratio helps us understand market perception of each company's future performance. Next is the market to book ratio, which compares a company market value to its book value. A ratio above 1 means investor believe the company has strong future growth or valuable intangible asset. Apple and Greentech show very high MB ratio, reflecting high investor expectation. Meanwhile, MISC and AMMB had MB ratio below 1, meaning they may be undervalued or seen as more stable but with lower growth. This ratio helps us identify companies with strong market and sentiment versus conservative value stock. Lastly, the debt equity ratio tells us how much debt our company uses compared to shareholder equity. A lower ratio usually means less risk. Companies like Greentech and Inari had very low or zero debt, which is a good sign for financial health. On the other hand, Instant and MISC had high debt to equity ratio, meaning they rely more on borrowing to grow. This helps us balance between high growth but risky company and those with strong financial stability.
Now I would like to present about the portfolio performance. In initial portfolio, we selected the 5 local stocks which the Inari Aluminum Berhad, AMMB Holding Berhad, Greentech Technology Berhad, Instant Holding Berhad, and the last one is the Apex Healthcare Berhad. We selected these 5 stocks because they have strong fundamentals and the best industry performance, and this can identify the risk because they have a different industry. For the return, these 5 stocks have the bad results with the negative because the market risk also negative. The best return is the MAND Holding Berhad, and the worst stock is the Greentech Technology Berhad. But compared with the KLCI, the MAND Holding Berhad and the Apex Healthcare Berhad is outperforming with the markets. For the risk, the most volatile is the Inari Aluminum Berhad, and the most stable is AMM Holding Berhad. This means that the Inari had a higher risk and the AMB Holding had a lower risk. Except by test and allocation, we use the Excel function to find the best optimum point, which is the higher return and lower risk. Based on this result, we find that we need to short selling in the Inari Aluminum Berhad. For the overall return portfolio, which is the negative 0.04%, and for the risk, which is the standard deviation, is 1.3253%. For the Sharpe ratio, is negative 0.0 264. This is meant by moderate risk but not exceed the return compared with the risk-free rate. We find that in this result, we can diversify the risk across the five industry. This will help to limit our risk and diversify the risk. This can find the optimal prioritize risk and control over the returns. The negative short ratio within by the pro risk adjustment return, but our performance is still better than the market. Based on the beta we calculate, which is the systematic risk, the most higher volatility is the inherent momentum perhaps, but the lower volatile risk is the Apex Healthy Care perhaps. For this result, we calculate the CAPM, but the five stocks show the negative CAPM due to the bearish market. The higher beta stock, which is the inherent at the greatest, fetch the larger potential loss in the falling markets. But for the lower beta stock like the Apex, offering the greater stability in the volatile conditions. This is meant by CAPM can confirm the not expect outperformance under the current bearish trends. For the efficient fund deal, we find this graph in the Excel, which is use the solver to show the optimum traded price between the risk, which is the standard deviation, and the returns. This construct using the diversified asset weightage to minimize the risk. So we find that the most optimum point, which is in negative 0.0224 portfolio returns and acceleration for 1.3253%.
Hi and good day, my name is Liu Gaho with metric number 29168. In our first rebalance, we saw off the stock that generated most negative return, which are Apex Healthcare Berhad that recorded negative 0.009% of portfolio return in our initial portfolio, and we replaced this stock with MISC Berhad. Moreover, we also added derivative instrument to hedge the risk, which are both future instrument. All in one, we selected stock like Inari and Marathon Berhad, M-Bank Holding Berhad, Quick Tech Technology Berhad, Eastern Holding Berhad, MIC Berhad, as well as Gold Future contract. Why we select this combination of portfolio is explained by the covariance and correlations, where covariance and correlations of Gold Future with all the stock are negative. Hence, Gold Future contract can effectively hedge the volatility of the price risk of all stock, as the price of the Gold Future is inversely related to the price of the stock. Next, we also saw the daily mean return, where the KLCI Intact has shown negative return. However, all our selected stock and Gold Future contracts in the first rebalance portfolio has shown positive daily mean return. Moving to the capital assets pricing model, CAPM of each stock is shown a negative expected return, which indicated a bearish market of KLSE. Therefore, investors only expect to obtain a negative return for taking the risk to invest in all stock. For asset weightage, we use solver function in Excel to determine the best combination of weightage that can maximize our portfolio return as well as minimize our risk. On top of that, we also assume we can short sell the asset when we're using the solver. In short, we obtain portfolio return of 0.08% by short in 3.05% and long in other assets such as M-Bank Holding Berhad for 19%, Quick Technology 2.26%, Eastern Holding Berhad for 3.06%, MIC Berhad for 46.81%, Gold Future for 31.74%. For the efficiency frontier, it shows the best investment point for the portfolio to offer the highest return for the given risk. In our case, the most optimal investment point are 0.08% of portfolio return and daily standard deviation of 0.6925%.
On 2nd June, we examined our second rebalance portfolio performance and decided to add one international stock to the existing portfolio. In the second rebalance of portfolio, there are 5 local stocks which are Inari Amatron Berhad, AMB Holding Berhad, Great Tech Technology Berhad, Instant Holding Berhad, and NIC Berhad. One derivative which is Gold Futures and one international stock which is Hyperint. We collected the historical data of the portfolio from 3rd June to 24th June for financial modeling purpose. In the second rebalance, we implemented the same techniques as previously by using Microsoft Excel formula. Based on the table, the Inari Amatron Berhad, Instant Berhad, and MIC Berhad show positive daily mean return. Meanwhile, MMB Berhad, Great Tech Technology Berhad, Go, and Apple records negative daily mean return. The daily standard deviation are records positive for all assets. Based on the table shows that Inari Hamilton Berhad records highest value of beta, which is 2.8561. Meanwhile, Apple records the lowest value of beta, which is negative 0.4340. Furthermore, the CAPM of each asset record positive value except Apple, which is negative 0.0045%. In summary, the local stock and derivative will be having a bullish trend in second rebalance, while international stock will be having a bearish trend. We have located the weightage of all the assets, and Great Tech Technology Berhad and Insun Holding Berhad are set in contrast, which the weightage will not more than 10% and more than 10% respectively to ensure profit gain. As a result, the total portfolio return has recorded a profit of 0.05% with a minimum risk of 0.6979%. Besides, the Sharpe ratio of the portfolio is 11.0408%. The efficiency frontier shows the investment points for portfolios which offering the highest return for the given risk. In summary, the optimum point of portfolio to invest is at 0.05% of portfolio return and standard deviation of 0.6979%.
Good day, doctor. My name is Yotibun, metric number 291821. Based on the table, all the stocks are getting lost in initial portfolio, except Inari Amanton Berhad has a profit of 506 ringgit. Among the stocks, Apex Healthcare Berhad faced the highest loss compared to the others, which is negative 288 ringgit. In conclusion, the overall return on the initial portfolio is negative 0.0224% or negative 112 ringgit. The next is first rebalance. All the stocks are making profit in the first rebalance except Inari Amanton Berhad has a loss of 13 ringgit. Among the stock, MISC gained the highest profit compared to others, which is 192 ringgit. In conclusion, the overall return on the first rebalance is 0.0832% or 416 ringgit. For the secondary balance, there are only 3 stocks that have gained profit, which are Inari Amanton Berhad, Yinson Holding Berhad, and MISC. However, we face loss in AMB Holding Berhad, Greatech Technology Berhad, and Go. In conclusion, the overall return on the secondary balance is 0.0544% or 272 ringgit. In our overall portfolio, we stopped trading and finalized the portfolio performance at the end of the second trading. As the result, the profit for initial portfolio, first rebalance, and second rebalance of portfolio are negative 112 ringgit, 416 ringgit, and 272 ringgit respectively. In overall, we gained 576 ringgit or 0.1152% of our initial investment. The next is portfolio benchmark. We compare the actual return of each stock with CAPM as their benchmark. Among the stocks in initial portfolio, there is only the loss of AMMB Holding Berhad under expectation, which is negative 0.0664% and negative 0.0904%. The remaining stocks are worse than expected, as their actual losses are larger than their CAPM. For the first rebalance, the performance of Inari Amanton Berhad, AMMB Holding Berhad, Greatech Technology Berhad, and Yinson Holding Berhad and MISC are good because the actual return is positive. Even the recovered return is negative. It implies that they make a profit in actual return compared to the loss in the CAPM. For the secondary balance, the performance of Inari Amanton Berhad, Yinson Holding Berhad, and MISC are good in the secondary balance because they make more profit in actual return compared to the CAPM.
To conclude, our project team successfully construct a diversified investment portfolio starting with RM500 and 1000 capital. We select 7 assets from different industries including a derivative gold and international stock Apple to balance risk and return. We conduct 2 rounds of rebalancing. Each rebalance was done removing underperforming assets and including more stable or high return alternative like MIC Berhad and Gold. As a result, the performance of the portfolio improved significantly and outperformed the market benchmark, the KLCI. From this project, we have learned how to apply economic, industry, and fundamental analysis in real-world portfolio management. Overall, we achieved a good of maximizing return with minimal risk using diversification and rebalancing technique. That's all from our group. Thank you and have a nice day.